Many people think billionaires are unusual beings, born different from the rest of us. While some are born with a silver spoon, others have built their fortune through hard work and focus, governed by a fundamental characteristic, a mindset. Mindsets build the billionaire, not money. Self-made individuals like Warren Buffett, Charlie Munger, Jeff Bezos, and other notable billionaires have business acumen, leadership skills, and the drive to recreate their financial success if the need arises. What's most important to understand is that billionaires have different ways of thinking about the world and assessing opportunities we can all learn from. So let's start with number one. The billionaire mindset is positive. Negativity bias is a psychological phenomenon that occurs when traders remember and over-focus on adverse trading outcomes, allowing their emotions, meaning fear and anxiety, to dictate their future decision-making. As the great Winston Churchill said, quote, "If we open a quarrel between past and present, we shall find that we have lost the future." There is seldom a clear shot at success in any venture. Entrepreneurs identify an opportunity and work tirelessly to penetrate the market, achieve profitability, and dominate the space. Several successful entrepreneurs have had varying success in their previous ventures, and while they learned from these experiences, they were never dissuaded by them. We should not let near-term negativity impact our investment techniques. Income investors should stay focused on their objectives and remain optimistic about the markets over the long term. After all, we get paid to swim through the cycles of negativity. Number two, the billionaire mindset is proactive, not reactive. Self-made billionaires make decisions and take action for goals that are often years into the future. While they may have set aside some funds for near-term expenses and headwinds, or perhaps make slight shifts in their pursuit, as most businesses did during the pandemic, they are on the path to seek opportunities that will unleash years into the future. As Jeff Bezos said, quote, "When I have a good quarterly conference call with Wall Street, people will stop me and say, 'Congratulations on your quarter.' And I say, 'Thank you,' but what I'm really thinking is that quarter was baked 3 years ago." As an investor, you may be waiting for the Fed to change its course on interest rates or the debt ceiling issue to be resolved. Perhaps you're waiting for the Russo-Ukraine war to end or for the next US election results to be announced. These are near-term news items that successful investors like Mr. Buffett would study, but not let negatively influence his decision-making. Number three, the billionaire mindset loves capitalism. The cost of almost everything is rising, and it's fair to complain about it. However, successful businesspersons are highly capitalistic. They love the idea of trade and commerce being controlled by private enterprises with a profit motive. The American economy is fundamentally built on capitalism, and despite regulations, political games, and talks, the system will favor corporate America and its thirst for profitability. As investors, you are uniquely positioned to benefit from this system by simply deploying your capital in these successful companies run by some of the finest entrepreneurs and leaders worldwide. As Warren Buffett said, quote, "It's just that I landed up in a terrific capitalist system, one that pays people who allocate capital extraordinarily well. Intrinsically, I'm not worth as much as somebody who invents something that could improve people's life or health or whatever." As investors, we should admire this capitalism and seek to invest in those companies that maintain profitability through economic conditions. In 2020, Wall Street and Main Street were dissing oil in response to a short-term headwind. As long-term investors, we responded by purchasing midstream and mineral royalty firms. Today, as consumers are worried about soaring energy costs, the solid income stream from our prudent and patient investments makes us smile at the gas station. Number four, the billionaire mindset seeks to build businesses, not work for them. The average individual works hard to earn money, potentially through multiple jobs throughout their career. But billionaires employ their capital to build their businesses and employ thousands of people to operate and grow their enterprises. As Kevin O'Leary says, quote, "Nobody forces you to work at Walmart. Start your own business. Sell something to Walmart." Number 5, the billionaire mindset is obsessed with learning, not entertainment. Mr. Buffett has famously said that knowledge builds up like compound interest. It is a powerful asset that has shaped billionaires and successful entrepreneurs. Almost no one is qualified to say they're done learning. As Michael Bloomberg said, quote, "I've never met a Nobel Prize winner who didn't think they had an awful lot more to learn and wasn't studying every single day." No matter what stage you're at in your life or career, it is crucial to stay educated on personal finances, the companies, and the industries you've invested in, and make data-driven decisions. Peter Lynch says, quote, "Stocks aren't lottery tickets. Behind every stock is a company. If the company does well, over time the stocks do well, and vice versa. You have to look at the company. That's what you research." Being a billionaire is not all about traveling in private jets, vacationing on your super yacht, or owning private islands. Now, while that is what the paparazzi capture and discuss for entertainment, the actual knowledge comes from studying the mindset most billionaires have that helped shape their financial success. I value time more than money, and would like to spend my time learning things and pursuing creative hobbies. While the market stays fearful, I'm hungry for opportunities, and am proactively buying quality dividends to automate my paychecks. The difference between a rich and poor mindset goes beyond the amount of money in the bank. I want to build a rich income stream, and you can do the same to set yourself on the path toward financial success and prosperity, just like a billionaire. To build rich income stream, the first stock I'm buying is Apollo Global Management, ticker symbol APO. Apollo Global Management, Inc. is a private equity firm specializing in investments in credit, private equity, and real estate markets. Apollo is rated A grade on the basis of growth, profitability, and price momentum. The stock is currently trading near $69, up 19% in the last 12 months. If you look at the 5-year history, then the stock price is up 118%. At the current price of $69, Apollo also offers a dividend yield of 2.5%. Now, investors might be worried that Apollo's rated D grade on valuations, but keep in mind that companies rated A in all factors will always be rated poorly on valuations because share price is continuously increasing as profitability continues to rise. And the last 5 years chart perfectly shows this. Discussing late results. During the first quarter, Apollo experienced a record $57 billion of inflows, which increased its total AUM to $598 billion. The company is well on its way to achieving its $130 billion fundraising target for 2023. Finally, in terms of valuation, assuming that management delivers on their 2023 targets, Apollo trades at just 8.1x forward fee and spread-related earnings. That's a lot lower than the asset light that Brookfield Asset Management and even OWL, which traded about 23x and 18x FRE, respectively. Even being extra conservative and assuming low-end multiples for asset management and insurance of 20x and 10x, respectively, and assuming a PII of 0, Apollo is valued at $108 per share based on 2023 estimates. The most bearish outcome I can imagine is no growth in 2023, which would yield a value of $88 per share, based on 2022 numbers with no growth whatsoever. And that's still above the current price of $69 per share. Any way you look at it, APO represents a worthy addition to any alternative asset management portfolio, which is why I rate the company as a buy here at $69 per share. Next on the list is Realty Income Corporation, ticker symbol O. Realty Income has an extensive portfolio of assets with a $40 billion market capitalization and a $60 billion enterprise value. The company has a multi-decade operating history with more than 10,000 properties and an A3, A- credit rating. The company is the 4th largest global REIT and has built up a greater than $7 billion European portfolio, an area with substantial expansion potential. Realty has paid 634 monthly dividends and has increased the dividend for 102 consecutive quarters. Even during the Great Recession, they were able to increase the dividend while keeping the payout ratio under 100%. What's more encouraging is that they've improved this metric over time and currently have the most conservative AFFO payout ratio in recent memory. This excellent dividend track record makes Realty Income one of the few REITs that can claim the title of a dividend aristocrat. Realty Income's portfolio stands at a very high level of 99%. Buying Realty Income would yield 5% and potential to earn handsome capital gain in the next 6 months.